Bitcoin had a rally to over 100,000 basically almost a year ago. I mean, after the election of President Trump. In point of fact, most of the reason it was rallying are things that he's already done. He's declared it a strategic asset. You can argue they've stolen it, you can argue they've done whatever, but the fact is they've acquired 300,000 plus Bitcoin in the United States, held by the United States, that is part of a strategic treasury. You have rules on stablecoins done and momentum to get something on market structure, which we'll talk about why that matters in a bit. You have the ETF issuers, ganging up. You had this mini bubble in digital treasury companies.
Fear rises, bad takes spread, and panic sets in, all classic signs that Bitcoin is nearing the bottom of its trading range. Dave Weisberger explains that Bitcoin is currently moving within a trading range, where fear tends to spike as the price nears the lower end, causing panic and recycled negative narratives. Despite this noise, he points out that Bitcoin's underlying fundamentals remain strong. Recent developments such as the U.S. government recognizing Bitcoin as a strategic asset, new stablecoin regulations, and ongoing work on market structure are laying the foundation for a Bitcoin-based financial system. He adds that institutions like JPMorgan are preparing to treat Bitcoin as pristine collateral, signaling that major traditional players now see it as a legitimate and strategic asset for the future. He notes that today's market dynamic is driven by institutional and experienced investors who view Bitcoin as a long-term opportunity rather than a short-term trade. These buyers are accumulating during dips, confident in Bitcoin's potential to deliver 5 to 10-fold gains over the coming years. This steady and deliberate accumulation provides real, lasting support for the market. In contrast, leveraged traders who chase quick profits often get punished by volatility. Weisberger also warns that expecting altcoins to rally in step with Bitcoin is a misunderstanding of market behavior. Institutional buyers focused on Bitcoin are largely uninterested in most altcoins, as their capital is aimed at assets with clear monetary and strategic value. While a few altcoins with real innovation may prove valuable in the long run, he advises investors to approach them with logic and discipline through steady dollar cost averaging rather than speculation. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
It's amazing. I did a video yesterday because people had asked me to do so, to lay out the bull case for Bitcoin. And I'm not going to reprise it here, except to say a couple of things. The first thing to keep in mind is when you're in a trading range and you get toward the bottom of the trading range, fear tends to spike and people tend to get panicky, and all the stories and all the FUD that people have on assets get recirculated. And so you get really bad takes. Now, why are we in a trading range? That is kind of important for people to understand. Bitcoin had a rally to over 100,000 basically almost a year ago. I mean, after the election of President Trump. In point of fact, most of the reason it was rallying are things that he's already done. He's declared it a strategic asset. You can argue they've stolen it, you can argue they've done whatever, but the fact is they've acquired 300,000 plus Bitcoin in the United States, held by the United States, that is part of a strategic treasury. You have rules on stablecoins done and momentum to get something on market structure, which we'll talk about why that matters in a bit. You have the ETF issuers, ganging up. You had this mini bubble in digital treasury companies that has since subsided, but now you have a firm foundation in creating a Bitcoin-based banking system, which is something that is a very big future driver that I don't think people truly appreciate. And yes, I'm talking about strategy, but not just strategy. I'm talking JPMorgan, talking about allowing Bitcoin as pristine collateral inside of loans once the accounting lets them do it. These are all major drivers. And so what does that mean? What it means is that institutional buyers, people that look more like me and with grayer hair than I have, are all saying, hey, this thing makes sense. We see the possibility of a 10x here, and let's acquire some. And if I can acquire some on sale, I'll do it, even happier than FOMOing in and chasing on the way up. So this year has been a godsend for all the people that look a little bit older, a little bit more grizzled, and understand that they're buying Bitcoin for a 5 to 10x over the next, n number of years, as opposed to buying it for a 10% move because they're on 20 times leverage over the next 5 or 10 minutes. And so you have this very different dynamic where the bids are very, very real, very consistent, not a wall of buying like people like to think of in crypto, but just consistent bidding as the market, kind of comes in. And when the market goes up, the bids kind of stop because they wait to see if it's going to stabilize there. And that behavior means that people who overextend during rallies get their noses smacked and lose. And that's okay. Now, this is great for traders who understand we're in a range. It's horrible for people who just expect the range to be broken on the downside. So if you're trading the range this year, you're doing phenomenally well. If you're trading it based upon, okay, I'm pyramiding down. So let's just consider two things. Consider a trader, just to explain to your audience what I mean by that. Consider a trader who, when it gets over 115 to 120, starts layering in shorts. And then when it gets below, 108 down to, 102, buys it back and either goes long if they're smart, or at least closes their short, compared to somebody who starts shorting at 116, it increases it a bit more and it gets to 120. And then when it drops to 108, pushes even more into their short because it's in profit, and again gets themselves wiped out when it rips back up in their face. And by the way, we've seen a lot of all of that. The fact is that you need to understand it's a range. Now, that's Bitcoin. Anyone who's trading altcoins expecting a Bitcoin rally to immediately fly into altcoins is not right reading the room. The people buying Bitcoin don't give a crap about most of the altcoins. It is true that if you're a Bitcoin trader, you might want to flip into something that is more altish. Now, I'm excluding Ethereum from this because that's a different dynamic, and we can talk about that if you want. But just assuming that you're buying every altcoin is going to go up in tandem is just insane. Now, that's very, very different than saying there are several altcoins which are building things that are really interesting and will hold up over the long run. And if you want to invest in those, that makes sense. That is logical too. And there you should just be DCAing in, taking all this with.
Dave Weisberger argues that the crypto market remains bloated with overvalued, useless tokens masquerading as legitimate assets. He points to examples like EOS, a project with no real utility or future still valued in the hundreds of millions, exceeding the worth of many genuine small-cap companies in the Russell 2000. To him, this highlights the irrationality and fat-tail overvaluation that persists in crypto. Many altcoins, he says, have less potential than the rights to an unfinished book, yet continue to command massive market caps purely through speculation. Weisberger stresses that such distortions reveal a fundamental misunderstanding of value within the space and underscore how far detached many assets remain from genuine innovation or economic purpose. He also dismisses the long-held belief in Bitcoin's rigid 4-year cycle as outdated mythology. Early having carried existential risk, when miners and investors didn't know whether the network would even survive reduced rewards. But now, Bitcoin's hash rate has grown exponentially, its security is unquestioned, and institutional demand drives its value more than program scarcity. Weisberger compares belief in the 4-year cycle to a cargo cult, blind faith in patterns that no longer have statistical or logical relevance. He argues that investors should base decisions on real data and economic reasoning, not superstition. As global finance evolves, he predicts Bitcoin will continue shedding its role as a transactional intermediary, much like it's no longer needed for altcoin purchases, and move further toward integration within mature financial systems, led by forward-thinking economies such as the UAE. Let's get back to the interview.
And this is where things I've been saying for 8 years come home to roost. Now, consider, first of all, when you say EOS is still worth, whatever it is, $400 million, when I checked a few seconds ago, it's zero. It's just masquerading as 400 million. Just alone, that makes my head hurt. I mean, effectively, EOS, which has zero utility, zero value, zero potential, there's no reason for anybody to own it ever, is worth more than almost all of the Russell 2000 companies that we consider the small cap universe that are real benchmarks. So just that gives you some understanding of the overvaluation of the fat tail of crypto. Fat tails, for those who don't know what that means, in a statistical, basically, if you have a curve, the way the valuation curve is, you have this group and then this huge number of coins. Mike McGlone likes to call them competitors to Bitcoin, and I laugh at him every time he says it. But the fact that there are coins with multi-$100 million market caps that have absolutely less potential than the rights to the book that I'm writing. And by the way, I'm not joking about that. I mean, much less potential. And trust me, I would sell the book rights to $1 Million Frat Boys for $400 million right now. Make me a bid, and it's yours. But the point is, it's just silly. So fine. But people need to understand history. If you don't understand history, you are doomed to repeat the mistakes, or doomed to make mistakes. The first cycle, the first halving in Bitcoin that people talk about with reverence, nobody knew if Bitcoin was going to fail when the miners got half the rewards. They didn't know if there was going to be a network that was going to be able to survive a 51% attack when that block reward dropped so substantively. They literally didn't know. That's why it took 6 some odd months for people to say, oh, okay, the network is still okay. And that's when the rally started. The second halving, there was still fear of the same thing. The third halving, there was still fear of the same thing, but you noticed that the fear was less and the resulting rally was less, but still incredibly substantive. Today, when you cut the last halving, cut from a number that didn't matter relative to demand drivers to a number that mattered half as much. That is not the same thing. There was no fear after the Bitcoin halving that the market was going to fail. The Bitcoin chart of hash rate, as I've shown on every Macro Monday, every time McGlone ignores it, is incredibly robust. It has grown geometrically since those days. It's now back to linear growth, but it was geometric growth for a while. That means the 4-year cycle based on the halving is nonsense. It doesn't mean there aren't cycles. Obviously, we have bull and bear cycles in every single market, but the S&P has more or less been, with a couple of blips, on an uninterrupted cycle since 2009. That's 17 years with a couple of blips. Why should Bitcoin, which is tracking other risk assets, be treated in any other way? It makes no sense. Yet, that's the reason that people are calling for Bitcoin to drop now, because the 4-year cycle demands that it could. It's sort of like, people, it's like the cargo cult, if you go back and read about that. Because
that one I don't know.
What'd you say?
So that one I don't know.
Yeah, it's a lot. You could Google it. It basically, cargo cultists in the Polynesian islands, they were given for a while, they were given aid packages and things, and they felt that was on some sort of time period, and people kind of thought that it was going to continue forever. There's all sorts of examples throughout history. Just because something's happened a few times doesn't mean it continues forever, right? And that's why I posted yesterday my favorite indicator. It's actually not my favorite. It's a bunch of bullshit. But the McRib indicator. It actually has more probative value. It has a higher statistical correlation than the 4-year cycle. Yet we all know intuitively that McDonald's putting out.
No, the McRib pumps Bitcoin. It's fact. You can see it right.
Seriously, Scott. I mean, come on. There is no more intuitive explanation for the McRib indicator than there is for the 4-year cycle, and it has happened more often. So honestly, does that mean you should buy based on the McRib indicator? No, but it means that you should ignore things that have no statistical significance and understand, have an investment thesis that makes sense. Remember, it wasn't all that long ago that every altcoin was denominated in Bitcoin. And so if you wanted to buy an alt, you bought Bitcoin and then you flipped it. Yep. Today, you buy Tether if you want to buy Bitcoin or altcoins, and you do direct swaps back and forth. You don't have that extra layer. Bitcoin is no longer used as an intermediary asset very often for people because there's no need for it to be used that way. And so the same thing is going to happen with payments. Same thing is going to happen with global money. And this story is exactly what I've been talking about and chirping about for the last 6 months, that it was inevitable. I'm glad to see it's in the UAE because they're one of the most forward-thinking governments in the world when it comes to finance. So I do think it's important.
Bitcoin's evolution has outgrown old narratives and misplaced optimism surrounding the broader crypto market. The space remains inflated with hollow projects, yet Bitcoin stands apart as a mature, institutionally supported asset shaped by real fundamentals rather than cyclical superstition. The myths of automatic four-year rallies and speculative altcoin wealth give way to a more grounded understanding that sustainable value comes from utility, adoption, and integration into global financial systems. As the market continues to mature, only assets built on genuine purpose and resilience will endure, while the rest fade into the noise of history. How might the continued institutional adoption of Bitcoin reshape the broader crypto market and accelerate the decline of overvalued, utility-less altcoins? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.